Hello, everyone. Welcome to our webinar. We will get everything set up here and start in less than a minute.
Yes, hello, everyone. Happy after International Women's Day, the day after, and happy Women's History Month. It is just a big celebration all around.
Yes, absolutely. We're going to be women empowering women today, or people that love women. I know there will be men on this as well, which we love.
Yes, yeah. Gender neutral, all of this is good. We're all just going to talk about how to be confident investors and just celebrating all the different achievements of different women, which will be really great.
Okay, well, let's get started. So again, welcome to our monthly webinar series. Today, we are celebrating International Women's Day. That was yesterday, but as Sammy said, it's also International Women's Month. And so, Women History Month. Yep. So we are celebrating all the amazing women that went before us. So a little bit about Financial Freedom Wealth Management Group. We founded the company in 2001, and we are a comprehensive wealth management firm that is committed to helping our clients improve their long-term financial success and pursue financial freedom. We serve retirees, we serve business owners. We also serve women and men going through transitions. So this could be going through a divorce, maybe going through a loss of a spouse, thinking about making a financial transition, whether that be retirement, selling a business. Lots of transitions happen in our life that oftentimes having a partner to help you through that transition is very helpful. This is our amazing team. We actually have about, currently we're at 17 employees. There are a couple not shown here, but we have offices all over Oregon, but are able to serve clients all over the nation. Today, with me here, I have Sammy. Sammy is a wealth advisor on our team and also our marketing manager. She has been on our team for over a year. It feels like you've been here longer than that.
It's been about 1.5 years. It'll be 2 years in July.
Yeah, I think we were okay. And Sammy, but she has lots of experience that she brings to us in the marketing. So Sammy obtained her bachelor's degree from the University of Texas, and she has over 10 years of marketing experience in the hospitality industry. When Sammy is not in the office working, she enjoys spending time with her husband and 2 dogs. And I think she came here from Texas, and I think they really love the Pacific Northwest, the camping, hiking, paddle boarding, and exploring Oregon. She also may have a special glow today as she is pregnant. How far along are you?
I'm 33 weeks today, so I'm in my 8th month.
You're in the home stretch.
I'm in the home stretch. Oh my goodness. And I feel it every single day now.
But we are thrilled and excited for Sammy and her husband as they welcome their first baby into their family. Yeah. So Sammy, I'll turn it over to you.
Thanks, Julia. Yes, I am. It's our first, so I'm experiencing all the new things. So any tips that you guys have for me, please let me know. But I'm here with Julia. We're really excited to be presenting this topic with you. Julia is our CEO and founder of Financial Freedom. She is an entrepreneur, of course, founding this company back in 2001. She's an author. She is a guest speaker. She's been interviewed by Barron's and Forbes and Financial Advisor magazine, so many different outlets and sources here locally and nationally. So it is really amazing to just see Julia lead this company and be a strong, powerful woman who is all about empowering women and just anybody wanting to know more about the financial space. So I'm very excited to be able to present with you today, Julia.
Thank you. You're getting congratulations messages in the chat.
Good.
So, and if you are participating today, please feel free to put any questions or comments into the chat feature, and we'll make sure to address those as the timing works.
Yep. Yeah. So, International Women's Day and the history of International Women's Day. It's something that is just so powerful. So it's March 8th every single year. And then of course, February every single year, or March every single year is Women's History Month. But it's a global day celebrating the social, economic, cultural, and political achievements of women. And it's all the women who have had those achievements, all the women that we are supporting to get those achievements in the future. Those are really powerful things to be celebrated. And the most important things to remember is that we, celebrate women's achievements. We raise awareness about women's equality, the gender pay, all of those different pieces. And we also fundraise for female-focused charities. So all of those are really important things that we do on International Women's Day, and hopefully we carry that through the rest of the year. There are a lot of important different national days and months that celebrate all different demographics and things like that. And so I know for Julia and I, it's really important to speak about women for this month. And two little tidbits that for history that I just wanted to let you guys know about. So for the history of International Women's Day, in 1920, women fought for the right to vote. That is not that long ago that we were fighting for the right to vote. And then in 1974, single and divorced women were finally able to secure a credit card without needing a male cosigner. That's crazy. I mean, that truly was just, I feel like, a leap away. I'm not even that far away. So we have come so far. There's still a lot of progress for us to make. So let's dive into some facts of why we are talking to this subject today. So 32% of women find it challenging to find reliable information about investment products. And we know that. We understand that investments are scary and that there's a lot of information floating around by a lot of different people. And so the reality is that 32% of women just find that challenging to be able to know who is reliable. 44% of women are not confident in their knowledge of the market, and 29% are not confident in their ability to make investment decisions, which is why this important topic of investment confidence, women empowering women, is something that we feel really strongly about. So those are two facts just to know why we're talking to you about this today. A couple other facts are 27% of women worry about being financially prepared in the event that their partner passes away, versus only 16% of men who worry about this. And the statistics show that we will live longer than men. So rightfully so, we have that fear, but we are hopefully going to be able to overcome that as well. And then lastly, only 19% of women say that they are the primary decision maker for longer term retirement and investment planning. And it's only 19% of women. And in the next couple of slides, we're going to show you why that number should be much, much higher. And these are really cool statistics for us to show that just came out recently. But the big picture is women belong where the money is, right? So women are 51% of the workforce. I mean, just think about those history facts of in 1974, we could finally get a credit card on our own. I mean, just the succession of how we've begun in the workforce, and then now are 51% of the workforce, we have a lot of power there. I mean, there was a time where women were not working at all, and that is something that is just truly mind-blowing to me, that we are now the majority. And then women direct 85% of consumer spending, which is also amazing. I mean, that takes a huge toll, or not toll, but a huge piece of our economy. I mean, we drive that. It is a huge piece of what businesses thrive and which ones don't. Those are all pieces that we have the power, and 85% of that consumer spending. And then the third point here, women control 7 trillion, you don't hear that word very often, trillion of investable assets. Women really do control a lot of the wealth, and either we just don't realize it, which we're telling you that today, or it's just something that you have it, but you just don't know what to do with that. And so again, that's what we're going to talk about. So last couple facts, just because I want to hype you up for this conversation. You joined this webinar for a reason. You joined to be able to be educated, and you want these pieces. Just know that money is a source of power and a source of strength. It's a tool, of course. I mean, it shouldn't be everything in our toolbox, but it is a source of power. And knowing that the phrase, the amount that I have invested, okay, so that phrase grew as a confidence booster, grew from 25% for women under 30 to 31% for women in their 30s, 35% for women in their 40s, and then 44% for women in their 50s. So as we grow in age, in knowledge, in power, in wealth, the phrase, the amount I have invested is XYZ, gives us that more confidence boost, which is really cool to see. And then lastly, this is a really cool tidbit. There are more female entrepreneurs than ever before. And so between 2014, 2019, there was a 21% increase in women-owned businesses, whereas all businesses only increased by 9%. And that was in 2014 to 2019. I cannot wait to see all the statistics that come out from 2020 all the way to 2022. I mean, it's going to be mind-blowing of just how many women are at the forefront of entrepreneurship, which is so great to see.
Absolutely.
Yeah. And then lastly, we do understand that with all this money and power and strength, we know that there are some challenges, right? I mean, again, this is why we're talking today. We understand that it's not just a straight trajectory, positive, flowing. We know that there are some things that happen. So like unpredictable life events, we know divorce can happen. We know that, death and a death of a spouse or an illness, that can also happen. Unexpected debt can always happen. The economic realities, we know that that's a huge thing, right? Retirement planning hurdles, the wage gap, that's still going strong. We're still trying to get that piece more equaled out. Caring for children and elders, women, we do feel like we are the primary people to care for our elders or our children. Even if we have a supportive and amazing partner, it does emotionally weigh on us a little bit more. And again, we have longer lifespans, statistically speaking. And then of course, that last piece of fear of making a mistake, it's the emotional piece of it. So we see the ups and downs of the financial situations that are going on. We want to be more conservative, and with our allocations, we don't want to make any mistakes. And then lastly, the big thing that we're going to talk about is the lack of confidence. So Julia is actually going to talk to us a little bit more about that piece. So I'm going to go ahead and let her take it away.
Yeah, thank you, Sammy. I get encouraged by some of those statistics, but I also get a little fired up in the sense of, I want women to be empowered. I want them to, yes, feel the fear, because that's normal, of something that maybe you're not confident in, but I'll also lean into that. And, what you focus on and where you put your energy will expand. And that's our hope at the end of this today, is you're expanding your knowledge, you're expanding your awareness around how you can do better with money and build that confidence, because it is all about confidence. It rules so much of our decision, or maybe the lack of confidence impacts us even more so. So the thing about confidence is we don't have it before we have it. So when you really think about that, what keeps us stuck, or what keeps us, maybe doing, feeling doubt and doing the things, or not doing the things that we know that we should be doing, is this lack of confidence, I think, in any aspect of our lives. And so I've been part of Strategic Coach, which is a coaching program for entrepreneurs, for almost 10 years. And Dan Sullivan, our coach, he introduced this concept called the 4 C's formula. So I want to make sure I give him credit for this, but this is a powerful formula for thinking through not only just how to be confident, but also how to be, we're going to take it one step further, and how to become a confident investor. Because here's the thing with confidence, like I said before, we don't get it until we get it. And oftentimes that doesn't happen until we go through this process. And so step 1 is committing to what you want. So it could be building financial independence. It could be retiring at a certain age. It could be helping your children become confident investors. There's a lot of things around money. It could be understanding the markets, understanding how events like what we're going through right now impact the markets and how to react to that. All of those different pieces come in and when we think about being a confident investor. But commitment is the first thing. Commitment to your plan, commitment to your financial plan, to whatever it is that you want. And then that goes to courage and being brave and overcoming obstacles that come into play as it will inevitably happen. So for example, maybe you decided to become an investor last month, or let's say December, and then your first 2 months of experience as an investor was what you may feel is really horrible, which, I mean, the markets are down the first 2 months of this year because of the geopolitical events happening, because of the inflation. There's a lot of things impacting that. That's the experience of these 2 months. But once you start expanding that, and maybe a year goes by and you have developed more capability as an investor, you'll see, most likely, no guarantees, but history, we look to history, and every time there's been a geopolitical event, a war, anything like that, the market recovers. It comes back 100% of the time. So we have no reason to believe that this would be anything different. So a year from now, you're going to have a completely different perspective on investing during this time, where right now you may think, you may be fearful, you may be wanting to make changes in that plan. But again, courage comes into play here, and that ability to stick with it. And then that you're building that capability, which creates new behaviors and new habits. And that ultimately is what leads to confidence. So don't start with confidence. Confidence is a result of all of these things along the way. And if you teach this to your children, think about this in all different aspects of your life. And it really is powerful when you're feeling not confident, which all of us do. Go back to the commitment. Where do I need to commit? Where is that decision? And then you can build off of it from there. Okay, so let's talk more about building investment confidence. Because as women, I think it's natural for us to shy away from investing and taking risks with your money. That's what statistically we see out there. But on the other hand, we are good overall. We're good with money. We are as financially literate as men. But a lot of times our confidence is not the same as men. And that lack of confidence is what can keep us from changing or making the changes that we need to do to reach those investment goals. It's shown that women want to be more engaged with their finances. 92% want to learn about financial planning, and 83% want to learn about investing within this next year. But what we see is a lack of confidence because women on average tend to underinvest their assets, meaning we like to hold a lot of money in the bank to feel safe. Or we like to allocate more conservatively in our retirement investments, in our 401k. And so over time, that will have a huge impact on how you accumulate your wealth. Okay, so kind of for an overall arching theme, I'm going to turn this over to Sammy to go over this.
Yeah, so empower, right? That's the whole theme of this webinar. Thank you, Julia. And empowering and making sure that you're confident. This is a really cool, just different graphic to show you. This is from Goldman Sachs, but write these down, right? So empower. Elevate your situation or evaluate your situation. So evaluate where you are in this moment right now. Okay, that's the first step. Manage your finances. So manage what you have going on. If you need to gather things up, make sure that you're have everything in a row, all your subscriptions, whatever budget items, manage that piece. Plan for your future. Plan for what you want in a week, 6 months, a year, really whatever that future looks like for you. Make a plan, write it down, make it a reality. Own and protect your assets. So things like life insurance or your credit, things like that, you can make sure you take steps to own and protect all of the assets that you do have, the 7 trillion assets that we have. Work with a financial advisor, which is Julia and I both are, and we have other advisors on our team that are so wonderful. And we just encourage you, it's not just about the working with the financial advisor, it's more of that accountability, right? Working with somebody to make sure that all these pieces kind of fit together. And educate yourself. We are all about that here. You signed up for this webinar because you wanted to be educated. I'm sure that you signed up for other pieces to be educated, read articles, go online, just whatever piece of information that you can get. Knowledge is power, money is power. So it all fits in that space. And then review your plan regularly. So it's not something where you just say one and done. You want to make sure that you're reviewing your plan, reviewing all these different pieces to make sure that you are taking all the steps that you need to get your financial plan in place. So empower. This is what we mean by women empowering women in the financial space. These are all the different steps you can do. And then I love this little piece at the other side where it says the key difference between a dream and a goal are the actions that you take. So just let that sink in because that is so true. And then for our next slide, it's really big on, okay, what are those dreams? What are those goals that you have? What are your desires that you have? You want what you want, right? And also there's a why behind everything that you do. So what is your why? What do you desire? And there are 3 different elements that I want you to kind of think about, write down. So number 1, your priorities and your values. So whether that is you want independence, you want retirement early, you are more philanthropic, and you want to make sure that charities are a big part of your growing of wealth. Those are your priorities and your values. Write those down, make sure that you know what they are. And they can differ from these three. These are just examples. Number two, what are your responsibilities? We all have them. Maybe it's a mortgage payment, maybe it's education, maybe it's support for elderly parents, child support, things of that nature. Write down what your responsibilities are and just know that that is also an important piece of your financial plan. And then three, of course, the fun one is your dreams. So what are you dreaming about? What are your future plans that you want? Maybe you want to travel more. Maybe you want a second home. Maybe you have lifestyle items that you just want to acquire. And maybe you want to take those piano lessons, or maybe you want to do, I don't know, it could be anything. Just reach out and try to figure out what those dreams really are. Maybe they come to you really quickly. That's amazing. Maybe they take some time to think about. But all three of these pieces really are going to make up your why behind your confidence, behind your investing confidence, all of that. And so I want you to make sure that you're prioritizing your financial goals and that your goals should be measurable. So they, you should be able to track them and track the progress that you have. They should be achievable and realistic, which is sometimes hard for us to write down. And they should be compatible. So they should be consistent with your lifestyle and your income and your values. And that piece of it to me is really important because there's a lot of outside noise of what you should be doing, where you should be spending your time or your money. But I want you to really focus on what you want. Again, what's your why? What's your desire? And that is the key to know what's important to you and to plan and how to make that a reality. So think of those three things as Julia is going to go through the investment piece of this, just kind of an investment 101 and why it's so important to start that investing process.
Yeah, very good, Sammy. And we covered a lot just in these two slides. So what I would say is, what's coming up for you, that's your most important action. Write that down. And then if you do want to work with a wealth advisor or someone on our team, these are the kind of things that our wealth advisors can sit with you and go over and help you plan. So we don't want you to be overwhelmed. Even if you just take one or two nuggets from today, to take that into action, that's then our goal here is done, right?
That's right.
Okay, so as you plan for your future and you invest, of course, we say invest early, invest often, but that may not be possible for you wherever you're at this stage in your life. But here's what I want you to hear. It's never too early or too late to start. So start is the key. And now is a great time to start because the stock market's on sale. With this, with the market going down here recently, it's our human behavior doesn't think we should be investing because there's a loss, but it's actually the best time to invest when the market's down. So it's like feeling that fear and doing it anyways. And it's like, I often get asked, over my business life, do you have any regrets? The only regret that I can think of is not investing more in 2008, 2009, not investing more in 2001, all those times where the market really came back. Even myself, and I'm an expert at this, felt that fear to like, oh, I can't invest. What if it goes down more? Get rid of that noise. And it is the best time to invest and have confidence that it will come back. Okay, so what we're seeing in this slide is the power of compounding interest and returns in your investment. So on the left-hand side, we have growth. Actually, all of these are growth of $10,000 to start. So someone that had a $10,000 investment, and then they added, the dark blue is they added $100 a month. The lighter blue is they added $500 a month. So from 2008 to 2018, that time period investing about 60% of your portfolio in stocks and 40% in bonds, that would have grown to 36,000 with $100 a month contributions, or almost 100,000 with $500 a month. And then on the other side was 98 to 2018. So over 20 years, we saw 66,000 versus 231,000. So you can see the more time you have to invest, the more that you can add monthly to your portfolio, the more obviously you will accumulate towards your investment goal. So this could be for retirement, buying a home, providing children's education, all these different ways. The power of investing, and keep doing it, keep adding, and don't stop no matter what the market's doing, is just a very common sense approach to investing.
Yeah, and Julia, one thing, just like you were talking about, it's in that 2008 or 2001 moments. That is the years that we're showing here. I mean, the investments still grew so much in between those years where you think, just like you said, oh, I can't do it, the market's down. I mean, just look at that. So that's amazing to see that.
Yeah, very good points. Okay, so you guys get to step into my closet here and look at my shoe closet. So this is a real picture of my shoes, and I am all about diversification. So your investments should be about diversification too. Because could you imagine if we just had one pair of shoes or one stock? Like, what if the heel broke? Then I couldn't have any other shoes. Or if what if the stock went bankrupt? You would lose all your money. So it is important. I'm giving you permission to have a lot of shoes, just like you should have a lot of stocks in your funds as well. So this is our lesson around making sure that you are diversified. Okay, there are 3 different ways that you can save money. So in the sense of how it's taxed. So we call this our investment buckets, but everyone can save in a taxable investment, a tax deferred bucket, I like to call them buckets, or a tax-free bucket. And so I think this is just a really visual way that we can kind of segment your different accounts out there and here's the thing, there's no one should be all the one that you're doing. So you should be saving in all these different ways. Now, most commonly what we see is that middle bucket, which is called tax deferred. So this could be your 401k at work. If you're with PERS or a nonprofit, it would be maybe a 403B or a 457. A traditional IRA falls here. So you put the money into this bucket pre-tax. So you you get a tax deduction, or you don't pay taxes on the money going in, and it grows. But at retirement, or 59.5 is typically the rule, sometimes 55, depending on the plan. But really the money's meant to be saved for retirement, and in retirement you pay taxes on that money coming out. Now, if you have all your money in the tax deferred bucket, the problem we have is there's not much planning we can do when you get to retirement. All the money that's coming out is taxable. So we encourage our clients to diversify and create a tax-free bucket, which is a Roth IRA typically. The Roth is an after-tax contribution, so you don't get a tax break for putting the money in, but it grows tax-free and comes out tax-free in retirement as long as you follow all the rules. And then lastly, the taxable, these would be more, your emergency fund should be here, your savings, if you're saving money for a down payment on a home, money that you're going to need available at any time. You pay taxes on the interest or on the earnings. You either get a 1099 every year, or it's in, let's say, a stock, when you actually sell the investment, then you pay the capital gains. So Again, no one right answer. All buckets are good to be in and have, but that's important as you think through the different types of accounts that you have. So how do we fill these buckets? Well, number one, pay yourself first. Like, you didn't go to work or build a business or, I think about how much time we spend working to pay everyone else or to have nothing to show for it. So get into the habit of paying yourself first. Automate that, make it a part of your monthly plan. And by nature, you'll be engaging in dollar cost averaging. So, in December, when the market was higher, you bought less shares with your money. In January and February, you bought more with the same amount of money because the market was lower. So it's just a good way to invest when the markets are volatile. Your work sponsored plans. So make sure you're participating in those plans. You are actually investing the money that is going in. Sometimes we see where the default is like a stable value fund. Well, that's not an investment, that's a savings account. So we want to make sure your investments are working for you for your future. And then it's not too late to save money for 2021. You can contribute into a traditional IRA for 2021 or a Roth IRA up until the tax filing deadline of this year. So I believe that's April 18th of this year.
Yep.
Okay, and lastly, consider working with a financial advisor. I know a lot of you on the call today are already working with us, and we love that. We want you to tell us your financial goals and how we can be a support to you. But if you're not a client of ours, consider working with one of our advisors. I like to say everybody needs a coach. I have a coach, top athletes have a coach. It just helps us stay accountable to what we want. It helps us take action and get to those goals. And the other thing is, there are a lot of things in finance to navigate. There are 10,000 plus investments you have to choose from out there. It can get confusing. We understand that, and you don't have to do it alone. And so rely on us as professionals to partner with you to take care of helping you make those right investment decisions for you. It's been proven, I think, which is ironically, I think Vanguard did the study where it showed investors that work with an advisor are proven to have better returns over time because they have that partner to think things through. Unfortunately, when markets get dicey like they have and volatile, and the markets go down, the natural reaction in us is like, I got to get out, I have to sell. Well, that's not the right action. And it's a lot of times it's that advisor that can come aside you and help you not make those decisions that would be detrimental to your future financial self. So consider working with us. We would be honored. And then lastly, never stop learning. So educate yourself. There are a lot of resources on our website. We have all of our webinars that we record. We write financial blogs. We have amazing tax guides. And really going through our process can help educate you one-on-one. So there's only so much that we can do in a group format. But when you sit down and really go through your financial house, no matter where you're at, because here's the deal, wherever you're at is okay. We have to accept our reality to be able to make changes and move forward. And so, there's money can bring up a lot of shame and guilt and, and regret, but it's important that you get through that to be able to, make these more empowered decisions and just take action and move towards towards your financial goals, as Sammy talked about. So never stop learning. So if you do want to connect with us, if you want to grab your smartphone, you can text the word freedom to 458-777-4458. And we are offering to have you schedule a complimentary consultation with one of our wealth advisors. There is no cost or obligation for this consultation, and we find that people find great value just from the consultation alone. So many times it's like we don't know what we don't know. And so our wealth advisors can point out ways to save on taxes, to improve your portfolio, and help you just create that plan for your financial goals. So with that, I just want to open it up for questions. We have to go through some disclosure slides here, but thank you for attending the webinar. And if you have any questions, we'll hang out here for a couple minutes and you can put those in the chat. Just to let you know, our broker dealer is LPL Financial. So all of our licenses are held with LPL Financial of our advisors. And you can see a little bit more about them here. And then if you need to go to sleep, you can read all this fine print about everything.
Okay, but go to sleep in like a couple minutes. Ask us some questions first.
All right, so let me go back to this slide.
Yeah. And just really anything that's kind of on your mind, you don't have to ask it here. Maybe it's a little bit, maybe you need to think about some of these pieces. We know that we threw a lot at you, but definitely text us to be able to schedule something, because that one-on-one time is really important. It's something that, like Julia was saying, we all have our own money stories, right? Like we all have our own stories of how money has affected us in one way or the other, how we grew up with it, or maybe there was a big situation that happened at one point in your life that really made you realize that finances were either important or not, or whatever that story is for you. And we kind of want to hear that, and we want to be able to help you with that and navigate the next steps. So really anything that you have on your mind, please do text us, and we'd love to talk and empower you. That's the whole point of this.
Yeah. How much money can be deposited into a Roth?
So, well, it changes with kind of how much your income is, things like that. But the rule of thumb is about $6,000 a year is how much you can contribute to a Roth. Now there's some, if you're over a certain age, you can do 7,000, but that is, like Julia was saying, you can do that up until April 18th of this year to contribute to 2021. So that's really powerful too, that you can get in the $6,000 or $7,000 for last year as well as this year and already get that head start.
Yeah,
that's a great question.
A good combination we have found is where you're doing the contribution into your employer sponsored plan, so you're getting their match. So maybe, if you have to contribute 6% to get their 3%, do 6% through your 401k, and then maybe above that, then start a Roth IRA, because then you're filling both of those buckets.
Yeah.
So really good question. All right. Any other questions? You guys are quiet today.
No, I think we just did such a good job.
All right, everyone.
Oh, sorry. I was going to say thank you for the congratulations as well.
Oh, yes.
Thank you for that. I see some of those in there. So thank you.
Are you excited? Are you nervous? Do you have confidence about your...
I don't have confidence yet because I haven't done it yet. That's what we learned today. Oh man, I'm excited. I'm very excited. I'm having a girl, so I am even more excited about this topic of just, empowering women of now and the next generation. So it's close to my heart for sure, but I'm very excited to birth this beautiful child.
Okay. I know, having two girls, it's really fun. But now they're 19 and 14. So and we're starting to talk a lot more about money with them, which is fun for them to actually start somewhat getting it, I think.
Yeah, I know. I love that.
All right, everyone. Well, have a good rest of your day, and thank you for tuning in. And please share this, so you'll get the recording, and please share it to your best friend, to your daughter, to your mother, to all the amazing women in your life.
Bye.
Bye.